Hello everyone, I am Rizwan. I welcome you to all to our earning disclosure of first quarter. I'll be your host for today. Let me quickly introduce you to our panel today. We have with us our CEO and Managing Director, Mr. M. Jamaluddin, our Deputy Managing Director, Sir Javed Noor, and our Group CFO, Mr. Masud Karim Matandar. I'd request you all to wait till the end of the session. We'll have a question session in the last segment of the program. If you have any question, please log in to post them. Without any further delay, I would like to request our CEO to start the session with a few opening words.
Thank you, Rizwan. Good day to everyone watching from different parts of the world. I would like to welcome you all to IDLC's earnings disclosure session. We are going to take a look at our first quarter performance of 2020. At the backdrop of this, Bangladesh has seen a new normal situation where economy is on the track of speedy recovery. However, the government has been actively working to sustain the growth amid the changing market liquidity and interest rate scenarios. Major contributing factors behind this scenario are, in fact, economic activity has already been picking up. Year-on-year private sector credit growth rose to 11.29% in March 2022, compared to 10.68% in December 2021. Meanwhile, year-on-year deposit grew by 8.74% in February 2022, compared to 9.21% in December 2021. Import grew by 46.6% to register $54.3 billion in the first 8 months of fiscal year 2021-22. Export grew by 26.9% during the same period to register $32.1 billion. Resultantly, the financial market remained volatile in Q1 of 2022, inflicting a visible pressure on the market liquidity and interest rates. On the capital market front, the index remained flat in Q1 2022 after 25.1% return in 2021. In view of this, IDLC achieved a profit of BDT 483 million in the first quarter of 2022, which was 2.5% higher than the same period of the previous year. Resultantly, our annualized return on assets stood at 1.4% and annualized return on equity stood at 11.5%. Looking at our core lending business, our overall loan portfolio saw a growth of 6% in this optimistic environment. On the other hand, subsidiaries profitability has been maintained at the same level compared to the Q1 of 2021, though DSE index remained flat in Q1 of 2022. As a result, our capital market subsidiaries have registered stable growth amidst the volatile capital market scenario. For our financial vertical, our efforts were more focused on portfolio growth, collection, and non-performing loan management, though our NPL has slightly increased. However, our liquidity position remains robust and will enable us to grow our loan book in the coming periods on a more optimistic as well as prudent way as the economy continues to recover. Nonetheless, sustainable portfolio growth and portfolio quality maintenance will continue to be our top priority. Going forward, our aim is to strengthen our distribution network and focus on process automation as well as enhance our product basket. Last but not the least, we aim to further investing towards meeting our community objectives. Now our DMD, Sir Javed Noor, and Group CFO, Mr. Masud Karim Matandar, will take you through the highlights of the period. Javed, over to you.
Thanks, Jan Bhai. Thanks for your opening words. Hello, everyone. I'm Sir Javed Noor. I'm Deputy Managing Director at IDLC. So initially, what we look at, how was the operating environment in Q1 2022? Well, bulk of the statistics has already been stated by our CEO. I'll just briefly touch base how things were. So what we have seen over the last few quarters is basically the import growth has surpassed the export growth. import for the last first 8 months of 21-22 was $54 billion, while export was $32 billion. And we have also witnessed almost 50% increase in import settlement. And also the remittance went deep down further. We have $15.3 billion of remittance in March 2022, up to March 2022, as a result of higher import growth, slower export growth, and lower remittances. What we have seen, the current account deficit has widened to $12.8 billion in February, up till February 2020, which was $3.8 billion in June 21. So to support the US dollar, central bank has sold something around $3.15 billion from July to June 2022, which is approximately 270 billion taka. This has been withdrawn from the market. At the same time, what we have seen because of the slow ADP implementation, the government has borrowed less from the market. Through NSE, they have borrowed only 12,000 crore of money against a budget of target of 32,000. And basically from the, if you look at the net government borrowing, which stands around 11,000 crore against a budget of 76,000. Move on. So if you look at the market, what we have noticed earlier that the central bank has mopped up the liquidity. And as a result, what you have seen, the call rates is increasing. It has now moved up to 4.7%, and we expect the uptrend to continue. Because of the rising commodity prices, the private sector credit growth rate has been over 11% in March 2022, while deposit growth has been slower, only 8.74% up till February 2022. So if you look at all with the rising private sector credit growth, mopping up of liquidity by the central bank with increased import, we've seen that banks and FIs have started offering higher deposit rates in comparison to their required floor. And we have also seen the yield on the government securities has observed moderate rise. And last not but least, central bank has also came up with a rate cap for us as well, the NBFIs. Our maximum deposit rate has been fixed at 7%, and maximum rate for lending has been fixed at 11%, and it will be implemented from July 2022. So if you look at the capital market, the index remained almost flat after having 25.1% return in 2021. And also the daily average turnover has reduced over 20%, which is around 11.4 billion. Now in the first quarter, the quarter one, it became 11.4 billion, which was around 14.7 billion in 2021. To reduce the volatility in the capital market, what index movement, what BCC has done, they have reduced the circuit breaker to 2%, which was implemented on 9th March. And again, from April 20th, it has been increased to 5%. A regulator has also allowed minimum investment requirement for eligible investor in SME board from 2 million to from 5 million to 2 million. This was done to increase the participation in the SME board. So amid the challenging environment, what we could do, we could post a little growth in our NPAT, around 2.5%. It's now increased to 483 million for the first quarter. And the customer advances has increased 5.6% from December 21. Total deposit has grown 2%, which was 75.3 billion. And also non-bank deposits growth in tandem, which is now at around 68.7 billion. So now I'd like to invite Masud Kori Mujumdar, our CFO, to dive into the numbers of our Q1 financials. Masud, over to you.
Thank you, Javed bhai. Hello, everyone. As our CEO and DMD just said, few major points. I will go you through the a bit details of the numbers. So first of all, I would like to say you about our loans and advances. As Javed bhai saying, it's a slightly increase to 6%, which was 9,176 crore, which is 6% growth, moved to 9,691. As we have seen the post-COVID situation coming to normalcy and business activities are increasing and many things are happening in money market and capital market. So opportunities are coming there. So we just took the opportunity and booked some lending basket. So I could able to book 6% over last year. On the other side, in liability side, say non-bank deposit, our all core attention is always on retail deposits. We always want to grow the retail deposits. So as the lending side has some demand, so we book like 2% over last year. So our overall deposit is 7,500, but in retail deposit we could able to grow by 2% in Q1 to 2021 to Q1 2022. So in case of balance sheet, I just said loans and advances and deposits. And on the other hand, in profit and loss account, net interest income saw a 13% growth over last quarter of Q1 2021. As loan book is increasing, we could able to manage our cost of fund a bit. So our resultantly our net interest income increased by 13%. On the other hand, fees and other income and investment, you can see from the slide left, it has decreased a bit. In case of fees and other income, it has decreased by 25%. Main reason basically was, as Javed bhai says, our capital market was a bit what I can say, normal or stable. I mean, no daily turnover has turned down. So our the fees and commission income from our brokerage firm, IDLC Securities, they could earn less. And on the other hand, other like settlement fees and prepayment and early settlement fees also decreases. As our business activities increases, we could arrest our early settlements of loan books. So fee income from loan book settlement and brokerage income decreased. So as a result, our fees and other income has decreased by 25%. And the other one is investment income. You can see the Q1 2021 we booked 57 crore. Now in 2022 we only booked 10 crore only as a consolidated basis. So as you can remember, in 2021 first quarter was very bullish market and daily average turnover was around more than 1,500 crore. And there was opportunity and we booked that opportunity. But in Q1 2022 market was relatively slow and daily turnover has come down. So there was less opportunity to for booking capital gain. So as a result, our investment income. On the other hand, our in Q1 2021 we booked some capital gain from government bond sale and interest income. So as a whole, from money market and capital market, both we could not manage our investment income up to that Q1 level. However, in case of operating expenses, you can see we can arrest our operating expenses at the same level of last year. As I said, our fees and investment income were less than last year. We tried to manage our cost at the last year level. Since variable costs like marketing and branding cost has not incurred in this quarter, as a result, we could arrest our operating expenses at the same level. So as a result, our total operating expenses dropped by 26%. And in case of provisions for loan book and investment was also dropped by 65% to 69%. Main reason was actually, I would say, in Q1 2021, the loan book provision were much higher than as usual. As you know, it happened because of withdrawal of Bangladesh Bank relaxing circular. In 2020, we could not show many, substandard or bad loss account. We could not classify them as restricted by Bangladesh Bank. But in December 2020, as Bangladesh Bank circular has withdrawn, so we had to book some provision in 2021. But in comparative in 2022, the situation is normal with all the Bangladesh Bank circular has withdrawn. So business coming to normalcy, we just kept provision as required by the latest Bangladesh Bank circular. So there is no, it's as I would say it's as usual provisioning for loans and for loans books. On the other hand, in 2021, we had to took some provision for investment. But as we booked some capital gain in last quarter, this quarter we had not, our portfolio is in good shape. Only 43 million was unrealized loss in the book. So we had provided full for our portfolio. So if we sum up, if I sum up all things, our net profit was grew by 2%, and last quarter we recorded 47 crore in 2021, but this quarter we could able to record 48 crore. So move on to the quarter-on-quarter comparison. If I compare, as mostly I have explained in previous slide, compared to in case of interest income, I would say compared to Q1 2021, net interest income increased mainly on account of higher portfolio. But if you see, it's slightly decreased from Q4 2021 on the base of few interest suspense, withdrawal of loan loss classification freezing circular. And in case of operating income, is reduced from Q2 21, lower fees and net interest income compared to last quarter of 21. As I said, in case of operating expense, we could able to maintain our OPEX at the same level of the last year. As you can see, each quarter we are maintaining OPEX of around 670 crore level. So resultantly, as operating income dropped slightly, as we manage the operating expense at the same level, so cost income ratio slightly increased from 37 to 38%. I would say we are happy at 36 or 37, 38 level cost income ratio, good for us, but our target will remain to maintain it as low as possible. We are fine with cost income ratio below 40. So move to the next slide. Loan book size, you see our balance sheet has slightly decreased. It's basically our treasury activities. As you know, in 2021 and 2020, the money market was much liquid. There was a scope for treasury money market activities, interbank activities. As we step into 2022, as our CU and DMD said, the money market become slightly tight. So the scope for interbank activities reduced. As a result, the balance sheet slightly decreased. On the other hand, our if you see the loan book, term deposit and non-bank deposit, in the core activities, we grew by 6% loans and advances, term deposit 2%, and non-bank deposit also grow by 2%. So we are concentrating our main activities, loans and deposit side. So if we go into details of our loan book composition, like we have SME, consumer and corporate, you can see from this slide that this is actually for our IDLC finance standalone statistics. Like in SME sector, we grew by 11%, and consumer we grew by 5%, corporate 2%. So our SME team was very focused and agile, so they could took the opportunity and booked some loans, so they grew by 11%. If we see the portfolio composition, more or less we maintain SME at 36% of our total loan book and 34% is consumer. As in last quarter, our corporate was stable. Our SME took some pie from them. So currently our SME is 38% of total portfolio, consumer is 38%, and our corporate is 29%. So if we see the entity-wise profitability, as I mentioned earlier, our total consolidated profit we booked like 48 crores, but here we can see the entity-wise profitability. You can see our IDLC Finance grew by 50%, IDLC Securities by 72%, but IDLC Investment dropped by 35%. IDLC Asset Management is more or less stable. So as a result, we could able to book 48 crore. I will explain decrease of IDLC investment. So as you know, the capital market was stable, and if we compare with last quarter, I mean Q1 2021 to Q1 2022, our daily average turnover was dropped. As a result, less capital gain was booked. In Q1 2021, IDLC Investment Limited managed to book almost 116 crore capital gain, but this quarter, they could only book only 11 million. On the other hand, there were some one-off deal gain in Q1 2021, around 30 million for IDLC investment. As you know, the deal booking depend on the not on time basis. It's as and when it finished, we book the profit. So in case of IDLC investment, the capital gain and investment banking profit was the main reason that was missing in this quarter. So hopefully coming quarter we will be able to manage that. So as usual, from 2021 we are showing you the status of our restructured portfolio. As you know, in 2020 we had to restructure our portfolio as instructed by Bangladesh Bank. So we would like to show you that the status of that loan book. So in 2020, as of 31st December 2020, our total 45% loan book was restructured. By 1 year, it's dropped down to 30%. Now our restructured portfolio is 2,700, and as of 31st March 2022, it's further dropped to 2,500. So it shows the signal that as we restructure our portfolio as per Bangladesh Bank guideline, but gradually our collection effort is there. Our average collection was 114% during this year, and from collection during this period, the overall restructured portfolio reduced by 1,552 million. So we can say that gradually it's improving, and maybe by 1 or 2 years we'll be able to fully recover from this portfolio. And also, you know, in last year, Bangladesh Bank also promulgated another circular. If at any case, if any customer paid only 15% of their due, they could be eligible for restructuring. So we didn't actually offer this facility to every customer. Only out of almost 40,000 customers, we only gave 2,444 clients this facility, around 8% of our portfolio. I would say in case of number and in case of portfolio, only 8% portfolio we gave this facility of deferment by collecting 15%. So here I would like to also show the status of this portfolio. This has brought down to now 7%. It shows that however, we kept adequate additional provision against these accounts, gradually reducing both portfolio balances and number of accounts due to collection effort. So I would say by this year and by next year, we will be able to clear this portfolio also. So moving to next slide, to shareholders return, as it's just number, I mean calculated number, as we report our 48 crore net profit after tax is, if we divide it by number of share, is now 1.4 return on asset. Our return on equity is 11.5%. Return on earning per share is 1.2, and book value per share is 40 taka right now. it's decreased slightly because of dividend payment. As you know, we distributed 15% cash dividend for 2021. We distributed almost 60 crore of cash dividend, and that's the main reason for decreasing as slightly the book value of IDLC Finance. So we would say that IDLC is still well capitalized with adequate capital adequacy ratio. If you see the capital adequacy ratio in terms of consolidated balance sheet and in terms of solo, in consolidated basis, it's 17.7%, slightly dropped from 2021, and in case of solo, it has also dropped by a few points, like 14.7% compared to 15.3% of 2001. It's basically due to loan book growth and relatively, I would say, 48 crore of profit and a dividend. It's a combination of like dividend payment, profit for the quarter, and asset growth. So combination of that is what we would still say that 14.7 is way above our regulatory limit. Our regulatory limit is 10%. On the other hand, loan to fund ratios, as you see, 78.7% we are currently maintaining, though our regulatory limit is 95% loan to fund ratio. So in case of NPL, you have noticed that our NPL ratio was 3.8 in Q3, but it dropped to 3.05 in December, and it slightly increased 3.37 in Q1 2020. By now, as we have seen that all sort of Bangladesh Bank relaxing and favorable facility have over, business environment are improving, and now we saw few business houses are suffering during this COVID, and now few of them are surfacing. However, we have provided enough cushion and kept eye on these clients. We expect at current situation we expect to maintain our NPL ratios at 3 or below 3. In between but in between we might see some spike. I mean, our main target is to keep our NPL ratio is 3 or below 3, but in between quarter it might spike 3.37, 3.8. Our main target is to keep this at 3 level. So there are a few non-financial highlights. Being as already I have shown you the few financial specs, there are few non-financial highlights, like under the affordable housing solution, for last 3 to 4 years, our one of the focus is on affordable housing finance solution. So as of now, number of active customer crossed 1,500, which is very good from our point of view, and portfolio through digital savings crossed 300 million from almost 2 lakh, more than 2 lakh customers. So as you know, this year we have launched our digital savings product with bKash. So it has just created a buzz, and every day we are booking new portfolios. So actually, on the other hand, as I said earlier, that our SME team are very energetic, and they have just booked month ever highest disbursement in March, 3,389 million. It's one of the milestone for our SME division. So however, our corporate team has also signed a mandate as a lead arranger for arrangement of 300 million for Kalia Replica Limited. So from non-financial perspective, as a corporate citizen, we are also stood by our society. So as part of that, IDLC and Prayas Institute of Exceptional Needs have signed a MOU to provide financial help to 5 children with special need. And also IDLC and Mom Institute of Fistula and Women's Health signed a MOU to provide financial support to the underprivileged women seeking fistula surgery. So being a corporate citizen, we are doing financing business, and also we are we stand with our society and doing some giving back to society to our capacity. So I'd like to request our DMD, Sir Javed Noor. Javed bhai, please take floor is to you. So you're mute.
Thanks.
You're mute again, Javed bhai.
Javed bhai, you're in mute.
Still in mute. Sorry, I just unmuted. Thanks, Masood, for your nice celebration of the financial highlights. So, what we are looking ahead. So, going forward, since environment is fine, economy is recovering, so our focus is book more loan and grow the book ASAP. What we are also looking at, continue to monitor the portfolio quality is just because we had 2 years where things were not in line. So we will remain close with the customer, help the customers, and so that we can have a healthy portfolio. Unfortunately, as we have said, that the rate cap is coming from July, so we'll see how this will impact our profitability and asset growth. So we'll probably before July we will decide what should be our next course of action for second half. So and we'll focus more on development of alternate sources of business growth. As a part of that, we'll explore different avenues of digital products. As the interest rate and inflationary pressure is high, so our approach to capital market will be cautionary. So we'll not, our objective is to basically take a position on the companies which have strong fundamentals, and we'll look at longer term horizon. Our community initiative is to continue focusing on education, health, and environment protection. And as usual, our tech and process improvement approaches will continue. So that's all from my end. And I'd invite Rizwan to take over from here for the Q&A session.
Thank you, Javed bhai, Majumdar bhai, and Jamal bhai for the presentation. We'll now move on to our question session. We already have a few questions on our portal. The first question is, what is your expectation regarding money market condition in coming quarters?
So let me take that question. What we have seen, the import growth has been faster than the export growth, and we have also seen slower growth or negative growth in remittances. So if with the rising commodity prices, if the central bank is to maintain the inflationary pressure, it is likely they will mop up more and more liquidity. So with that, I don't think liquidity scenario will improve. It will rather deteriorate, and the interest rate is set to rise. However, since we will be operating on a rate cap environment, for both banks and FIs, this will be an interesting time.
Right. Javed, you have already touched the rate cap, the situation of rate capping, and then our next question is regarding rate cap. The question is how it will hit our bottom line, and how do we plan to overcome the situation?
Great. It's a great question. We know that it will come. So as of now, I think our net margin is around 5%. So which effectively will be down to 4%. So we'll have 25% then on our NII. NFI is not looking great. So what we're looking at is to make the business further efficient, to recoup whatever loss will be made because of the rate cap. And also we plan to increase the portfolio at a faster rate, basically to keep the profitability in absolute terms, not in percentage terms, in absolute terms.
Right. So our next question is, fee and other income was decreased from 360 million to 270 million. What is the main reason behind this? And also the same user also had another question. The incremental specific provision decreased from 340 million to 120 million. What is the main reason behind it?
I'll request Masood Mujumdar to take.
Javed bhai, thank you. As during the presentation, as I already mentioned, that this decrease due to the less commission income from our capital market subsidiary like IDLC Securities Limited and IDLC as the daily turnover was less compared to last quarter of 2021. That's the main reason. And in case of provisioning, as I already said, like in 2021, 34 million, 340 million is a bit higher end, I would say. I mean, that is not as usual as the circular of Bangladesh Bank withdrawn in 31st December 2020. So, and in the first quarter of 2021, we had to book a few accounts for that, as we could not report them classified in 2020 as the classification circular withdrawn. So for in first quarter of 2021, we had to book them and provide for them. But in 2022, I think the business situation is becoming normal, and we are providing as usual, like 120 million. So, I mean, in normal cases, it's around this amount will be our normal provisioning amount. I mean, so if we compare with Q1, it seems that dropped very much, but actually that Q1 of 2021 was unusual. But this quarter is, I think, a normal case.
Thank you, Masood bhai. Our next question is regarding the NPL ratio. NPL ratio has gone up to 3.37% in Q1. How do you plan to manage the NPL in coming days, and what would be the plan? NPL ratio.
Let me take that question. Yes, the NPL rate has gone up, and that's reality. We just need to remember that we had 2 tough years. We remained present in the economy, so bulk of our customers got impacted. While central bank has given them the relaxation for the last 2 years, but we are now seeing, say, the blisters in our portfolio. So in the last 2 years, we've taken substantial provision to make sure that we remain healthy. And in this, I would say, this year or so, we see that the NPL ratio will hover around 300 basis points. More or less. So our approach will be cautionary. We will continue to monitor the portfolio. We'll book quality loans so that we can recover the losses.
Thank you, Javed bhai, for the answer. Our next question is regarding our subsidiary performance. The question is, subsidiary performance remains stable in Q1. What is the expectation in the coming quarters?
I think during the operating environment part, what we have advised that the inflationary pressure and the liquidity pressure will continue. So just drawing your attention there, we think that this year's the capital market might not do well. So even if we have stable performance, we earn regular money from our subsidiaries, we'll be very happy. But unfortunately, this may not be the scenario for this year.
Right. So our next question is regarding our cost-to-income ratio. Our cost-to-income ratio has gone up to 38% in Q1, compared to 32% in Q1 2021. So how do you address it, or what was the reason behind it?
Okay.
Please say the question.
Okay, as I said earlier, that the cost-income ratio gone up to 38% compared to 32% of Q1 2021. It's not because of increase of cost part. It's because of less income part. I mean, cost part is stable. We could able to, as I have shown you, that our operating OPEX, we could address or arrest our OPEX level at the last year level. But as in Q1 2021, there was some one-off or higher end income booked in Q1 2021. So as the cost was calculated compared to income, that shows that it got down to 32% range. But Usually, I would say that 36 to 38% cost income ratio is healthy for any financial institution. But our target, as coming days, revenue might not be as healthy as 2020 or 21 from our capital market. I would say our focus will to maintain it at 38 to 40 range or below 40.
Thank you, Master, for your answer. We don't seem to have any more questions.
Rizwan, you are not audible. You are still not audible.
So I think our most of the question has addressed, I mean answered, as he was saying that there were no more questions. So I think we can conclude the session depending on as we don't have any more questions to address.
So thanks everyone. Thanks for your patient hearing. I'm looking forward to a great year ahead. Thank you.
And thank you everyone.